Okay, well, hello everyone. My name is Sherry Waldrop. Thank you today for joining us for the Small and Rural Library Forum meetup on the topic of the library insurance basics, health insurance, public liability, unemployment, workers' comp. I am the director at Allerton Public Library, which is in central Illinois, and we're baking in this heat wave along with the rest of you. I always think it's worse down here. I don't know. Maybe some of you are down here. I'm the manager of the Small and Rural Libraries Forum. Just getting started with that. So part of my experience to me feels like it's going to be a little rocky, but that's okay. The Small and Rural Libraries Forum has these meetups for people who work at small and rural libraries. And a lot of the times we come up with these things because we understand that small and rural libraries may need this additional insight. And so if there are topics at any point that you are interested in having us find a speaker for, or having us present to having us to present to the small and rural libraries, just shoot me a chat, send me an email. You can send Kristen an email at ILA as well. We are recording this. On Friday, the recording will be posted to the SARL website, which is on the ILA website, ila.org. Our speaker today is Kathy Parker. Some of you may have met Kathy at Directors University or elsewhere. Kathy's been around for a while. 40 years of
40
library.
plus, 40 plus.
Yes, 40 years. Wow. You started as a shelver. I did too. Isn't that exciting?
Yeah. Didn't most of us? I think that's all of the long timers kind of started, right? We started out as a shelver back in the day out of high school.
Yeah. And she went all the way up to being a trustee. For 16 years, she was the district library director. We're at, I don't have that in here. Where were you?
At Glenwood, Linwood, which is about 30 miles south of Chicago.
Okay. Currently, she does consulting work. She's been interim director. She does consulting work on financial reviews, staffing, and trustee training. She's been on numerous ILA committees. If you weren't on the call yesterday about the Illinois library standards, but she helped out with that as well. Yes, the Illinois Public Library Standards are live and they are on the ILA website. Went to that yesterday. That was awesome. She's the co-founder, one of the co-founders for Directors University, and she's co-author of the Public Library Directors Toolkit and the Public Library Directors HR Toolkit, both of which I have here in my office.
Thank you. So I appreciate that.
If you do not have them, then I recommend that you get them. So welcome, Kathy. I'm going to turn it over to you.
Thank you, Sherry. And just as we said, this is being recorded for Directors University. So we're going to hold the questions until the end, but you're free to put them in the chat. I may not catch them, but Sherry will. And then when we get to the questions, she'll read back anything that's come up, and then we'll get those questions at the end. Yep. So with that, let me move some stuff out of the way here so I can see on my screen. We've already had, let's see, my computer is frozen now. Okay, we've already had that, so we don't need to worry about that. So what I'm going to cover today is library insurance on the HR side and on the public liability side. This is going to be just an overview of the insurance that you have, because honestly, these presentations could easily be an hour for each type or more. So today I'm just going to touch on it. And then if you have like a lot of extra questions, certainly you can research it further, or you can contact me. I'll have my contact information at the end of the slides, and you can ask me more questions. So with that, as I am going through the things that we're going to cover, the items we're going to cover on the health insurance end and the liability end, I'm going to talk about terms that you probably need to know, how you determine your coverages, and just kind of like how to file a claim in that claims process, because that can be, depending on, especially in unemployment and workers' comp, it's very different than when you have health insurance and you have staff who just go to the doctor, and that's not technically a claim. But I just kind of want to walk through like an insurance, an unemployment, and a workers' comp claim. So the first thing I'm going to talk about is probably our employee side of our insurances and the most coveted of all that most staff want, which is health insurance. There are a couple different types of insurances that libraries usually give their staff. One, of course, is the medical end, which is your health coverage. You really want to have the best plan that you can and the best coverage that your library can afford for your staff, and pay as much of that premium for that and less for the staff, as much as your budget will allow. I understand that, a lot of libraries, they don't have a lot of money, and health insurance is very expensive and is seeming like it keeps going up. I just saw in the directors only for Rails this past week how insurance rates are going up even more. So, as we know, insurance always goes up, whether it's your home insurance, your auto insurance, and also your healthcare insurance. The next is your dental. Obviously, this has to do with anything regarding any kind of dental coverage. Usually there's dental HMO and dental PPOs, much like with the health insurance. The nice thing is the premiums for the dental insurance tend to be pretty reasonable for coverages. And in my experience, a lot of libraries will actually pay the full premium for this coverage if a staff member wants it. I'm sorry, most libraries don't pay the coverage because it is fairly inexpensive, but I have seen some libraries who do cover it. So it's a nice little benefit for a library to give to an employee, but there is a cost to it, obviously. The next is the vision, and this usually covers your routine vision screening, any corrective glasses or contacts that you may need. VSP is probably the most common insurance carrier for vision insurance. Again, this is a very inexpensive coverage. Usually it's just a couple of dollars a month. And this is one that I have seen libraries almost always include in their healthcare package. And then the next is life insurance. Some libraries may also include this as part of the basic insurance plan for the staff at no cost to the library. I know a lot of libraries, mine had, I believe, a $50,000 life insurance premium. And then often the employee could buy additional coverage if they chose to, and of course that cost would be passed on to the employee. But it was nice to have, especially if you have a family, so that you want to increase your life insurance options. And it's a fairly inexpensive benefit that the library is providing to the employee, and is just, as I said, it's a nice benefit to have. The next, like I said, I want to talk about terms to know regarding your health insurance and your dental vision. Usually this doesn't really reflect in life insurance, but mostly the health and the dental. So the first is your premium. And these are things I'm sure you're all aware of, not only just because we often, we have healthcare, or you also have vehicle insurance where these will apply. But your first is your premium. And this is the amount of money that is regularly paid, usually on a monthly basis, for your insurance policy. It usually will include a contribution from both the employer and the employee. Some employers I've found have covered 100% of the premium, but I've never been lucky enough to work at a library that could afford that. I often had to pay a portion of my premium, but I was lucky enough to only have to pay maybe 10 or 20%. One library I worked at, it was a 50% that the employee had to pay, which was very, very expensive. It was $500 a month. So many people did not take it. The next is your deductible. So this is the amount that employee must pay out of pocket for covered healthcare services before the insurance company starts paying for the claims. So once your deductible is met, the insurance company will begin to cover a portion of those costs. And then the next is a copay. This is a fixed amount that an employee pays for covered health services such as prescription drugs or doctor visits. And this copay is usually paid at the time of service and is in addition to the premium. We see a lot of copays more in the HMO environment, though while I have a PPO, I do pay a copay for my medications when that time comes. So I'm going to talk about a couple of different types of plans that we come across. I had already mentioned HMO and PPO. So the HMO is your health maintenance organization. So this is an insurance plan that typically limits coverage to the care from doctors and hospitals within a certain network. Referrals are required to see specialists from your general practitioner. and there are usually no deductibles. But they often have the copays that you may have a $20 copay, $30 copay, whatever the case. HMOs are generally cheaper than other types of insurance plans, which is why a lot of people take them, because their premiums are often less expensive. The next is a PPO, or preferred provider organization. This insurance plan offers more flexibility than an HMO. Employees can see doctors either within their network or outside of their network. Referrals are not necessarily needed to see specialists, but know that if you are seeing a specialist outside of the network, you will have more cost to pay, because a lot of that may not be covered in your deductible. So you may have to pay more of that. PPOs are usually more expensive than HMOs, and they often have they will have deductibles. And within the PPO range, you often will have like a high deductible PPO, and where you could have, like, I have a high deductible PPO with an HSA, which I'll mention in a minute. And my deductible is like, I think it's like $3,500 a month, but my premium is far less. And since I'm retired, I'm responsible for paying my full premium. So I choose to pay less, and then I rarely go to the doctor. So it works out for me. The next is your FSA, which is your flexible spending account. So this is an account where employees can set aside pre-tax money from each of their paychecks to pay for healthcare costs, such as your deductibles, your co-pays, and any kind of medications. Only employees can contribute to FSAs, and it's usually not able to leave with the employee when they leave that organization. It stays. FSAs often have a use it or lose it kind of a situation, where you may have to use it within that year. So just be kind of aware, if you do an FSA with your employer, that you look at the parameters of that. But it's a great way to set aside some money in a pre-tax situation as well, to cover things if you have any healthcare costs coming up. Next is the health retirement arrangement, HRA. So this is an employer-funded account that reimburses employees for qualified medical expenses. The account stays with the employer, and only the employers are contributing to HRAs. I've not heard of a lot of organizations, especially libraries, that have this. It's something that I'm not familiar with at all. I don't know one person that's ever had one. So I don't know how prevalent they are in libraries. It has not been my experience that anyone I know has instituted one in their library. Not saying they don't exist, I just haven't seen it. The next is the HSA, Health Savings Account. This is a savings account that both the employers and the employees can contribute to pre-tax money for qualified medical expenses. The account stays with the employee, so when that employee does leave, they can take these monies with them, and they can continue to put into that account even after they leave that organization. I have an HSA that I had from my library at Glenwood Linwood. It was kind of a test to see how this would go. And I have to say, I love it. I can put in a certain amount every year. It's guided by the feds and how much you can put in. And if you're over a certain age, you can put in more per year. And I don't remember the exact amount, but it's like $4,000 or $5,000 a year. The nice thing is that it's portable, so I can take it with me. I'm retired, so I was able to keep it. And I can put in every year, which gives me a tax break when I file my taxes, but the monies can only be used for medical expenses. So you have to realize, but it can be anything medically related, whether it's a premium, I can pay my premium with it. I can pay my medications. I can, buy Band-Aids. So anything that's medically related, I can use that, but just make sure you keep your receipts when you do that. The next one is the ACA, Affordable Care Act. We've also heard this called Obamacare. We hear that less now, and it's mostly just Affordable Care Act. This law, it's a law that requires employees with 50 or more full-time equivalent employees, or FTEs, as we see, to offer health insurance coverage. FTEs refer to employees who work more than 30 hours a week. That is in the Act. So employees that work 30 or more hours a week and are working in an organization with 50 or more FTEs are eligible for to have the Affordable Care Act. The cost of the insurance for the employee cannot exceed 9.5% of each employee's household income. So there's a lot involved with this. So if you are interested in looking into it, obviously, you can Google it and look it up, and you're going to get a lot more information about it than I'm going to be able to provide. I've never really had to worry about this. My library did not have 50 or more FTEs, so it was something that we did not have to worry about. And we did have an insurance plan for our employees, so I did not have to get too involved in it. But I would recommend looking it up because there's a lot of parameters for that. So when you are looking at your health insurance plans, you want to kind of determine your coverages, right, and what you need. So when you are doing that, you want to ask a lot of questions, and you have to ask questions based on what your experiences are in your library. So because you want to make sure you're making good choices, not only for your employees and their healthcare needs, but also for your library financially, because healthcare is really expensive and it's never going to go down. It's always going to go up. I mean, I think we've seen that as our experiences. So you want to make sure that you are not putting the library in financial jeopardy, but also providing good healthcare options for your staff. So some of the questions you want to think about is, what kind of plans should you offer? Do you offer an HMO or a PPO? Of the PPO, do you want to offer the high deductible PPOs? Do you have the option to offer both of those plans? Some libraries, depending on if you're a district library, a village library, or a city library, you may not get that choice. If you're a village library, or a city library, you may only be able to offer the plan that your village or city provides. It kind of just depends on your relationship with your city or library. If you're a district library, you can kind of do anything you want. However, if you're a small library and don't have a large amount of people taking health insurance, you may not get the best rates because you don't have a lot of buying power. So the next part of that is, are you in an insurance pool? And if you aren't, can you be? And I'm going to talk a little bit about insurance pools in a minute. But my library, I only had like 4 or 5 people who could take insurance who were eligible because it was for full-time staff. But we certainly couldn't find reasonable rates. So luckily we were able to be in a pool, the Limerick pool, and that allowed me to be in with other libraries within, I think they were mostly Rails, I'm not sure, but in Northern Illinois, certainly. And that allowed us to have the pool with more buying power. And I'm going to talk about pools in a sec. Can you change your premium? So you have to look at things when you're looking at insurance and the premiums that you're seeing. Are there any areas that you can change? And one of those can be, if you raise your deductible, your premium will be less. So is there a benefit to increasing your deductible so that your premiums are more affordable? Unfortunately, the deductible also has to do with the employees and what they can afford, because sometimes the deductibles may get passed on. So you have to look at that. Employees have families, and then you have to think about family coverage. This is the most expensive of all the coverages in any healthcare plan, is the family coverage. I will say that when I first started out, I only saw individual and family, but now I'm seeing individual, family, employee and children, or employee and spouse. So they've kind of broken that up so they can kind of, if you have someone who is a single mom and has a couple of kids, it's a little less than if they were paying the full family plan. But is this something that you should cover for your families? It would be great if every library who had family coverage could pay 100% for their families. But that's really not feasible, though I do know a library too that does do it. But should you cover it? And if you can, how much can you cover? So you definitely want to kind of look at that. Any type of benefits that you can do to sweeten the pot for employees. So offering things like an FSA or an HSA that may, kind of like give that extra benefit to your employees, because ultimately we want our employees to be happy and healthy, and their families to be happy and healthy. So you want to make sure that if you can, do the most you can do for your employees, and as the best that you can do for your library as well. And it's a hard decision, because sometimes you have to make decisions, especially as premiums go up, that you may not be able to pay as much of that deductible as you could before, but you still want to provide the good insurance plan. So here I have a chart, when you are kind of looking at your insurance options. And I know this looks kind of convoluted, but I'll explain it to you. So you want to kind of compare, so you're comparing apples to apples. So on the top part of the chart, we have a healthcare plan with several options. You have your HMO, your PPO, PPO2, which is this. I actually pulled this from my co-author, so I'm not sure what PPO2 is, but if you have like a high deductible PPO, maybe, and then the current plan that the library has. So this is for a dental HMO, which is the difference between a dental HMO and the second part, the bottom one, is for a dental PPO, which tends to be a little more expensive. So if you look at the blue boxes, the blue column, that's what the library is currently paying. And where the red arrow is what the total amount is covering dental, vision, life insurance, and the health. The green box, I couldn't do it to change colors, so it should just be yellow. But the green box is the HMO numbers, and then the yellow are the two PPOs. So if you look at the health insurance, the premium is $471, the PPO is $501, and the PPO2 is $586.66. So to add dental to that is a $17.94 across the board. The vision, again, a very small amount, is $7.41. Life insurance of $50,000 is $13.33, with the total being $509.74, and then $539 and $612. So the library, if you look, it seems like $509.74 is kind of the sweet spot that they can afford to pay the premium for every employee who has this. So if you look at the two boxes below, the employee pays per month, employee pays per check. If the library chooses with the dental HMO, the employee does have to pay a small amount over the $509. So if the employee picks the HMO, the library pays the whole premium. If the employee picks the PPO options, they have to pay a little bit of a premium for those two options, which is still far better than what the library is currently paying. So anything they choose is going to be as a benefit. The bottom of the box, it's the same numbers, but with the dental PPO. So the policy, the dental insurance is double of what the HMO is. So again, these numbers will be a little higher. So it depends on what the library wants. And this is when you want to have a conversation with your employees who take health insurance about what their needs are. So maybe you have, your library staff who all have major dental issues. And so being able to go to a dentist of their choice as opposed to an HMO dentist, which are fewer and far between, I found, that may make a difference. So you want to have these conversations with your staff. Don't make decisions unilaterally based on what you think you know, because you do want to do the best you can do for them. And if everyone is willing to go to a higher deductible, whatever the case, do that. So, and you can change these, your insurance changes every year. So the rates go up, you can opt in, you can opt out. So just definitely look at your numbers and make a comparison and go in with as much knowledge as you can, so that you are, again, making the best choices that you can. The next thing I'm going to talk about is buying insurance. So how do you actually buy it? Now that you kind of determined how much coverage you need, how do you actually go about doing it? There are a couple of options. You can do an insurance broker, and a broker is essentially a middleman. They go out and find a quote for various carriers, find the best coverage and the best rates for you. They'll work with the deductibles that you need and find those numbers that kind of fit into your sweet spot. The only thing is, when you use a broker, they do all the legwork and they get paid a fee to perform that for you. I have a broker for my home, auto and house insurance. I like it, and I don't have to do the work. And I also can call them middle of the year and say, I'm not happy, can you rerun my numbers? So, but I do pay a little bit of premium for that. The next is an insurance pool, which I have mentioned before. So an insurance pool is where a group of government organizations pool their funds together to finance the exposure, the liability, the risk, or some combination of the three. Pools often have more purchasing power, and carriers will often come to give a quote with better premiums based on the number of the members in the pool. The thing about a pool is you may get coverage that maybe you hadn't been able to afford prior, because again, it's that buying power. Like I said, when I didn't have the ability to really get good insurance quotes because I only had 5 people taking insurance. But once I was in a pool, I was able to get a much better rate. And I retired and I'm still on that same insurance pool. So it's worked out well for me. And while I see my rates go up every year and I'm paying that out of pocket, I still feel good about the coverages I have. Do know that when you are in a pool, and especially in a healthcare pool, if there are a lot of catastrophic events, say you have a large number of people who have cancer and have cancer claims, your rates are going to go up, but that is shared by the whole pool. So all the rates will go up, but it won't go up to the point that if it was just your library that had a catastrophic claim, and that rate may go up exponentially. So they'll go up a little bit, but again, it's shared across the pool. So while they do go up, it's not going to hurt as bad. And the next is your own independent agent. A lot of libraries you can get coverage on your own, obviously, by using a local independent agent. A lot of libraries and boards prefer to keep their business local to foster those relationships and build a community. And this is all well and good because there's some great advantages to that. You personally know your agent, so you're dealing with them. You probably see them around town. When there's a claim, you may get that response much quicker because you know them, you're friendly with them. The downside is that you may not get the buying power of a pool or even a broker. And the premiums may be higher and the coverages may not be as good. They may not be able to find all the coverage that you want or offer the coverages that you want. So it's really just kind of a decision on what works best for you. I was interim director at a library who the board was very insistent on using their local State Farm agent for their liability insurance and their health insurance. And that was great, but when I reviewed their coverages, they did not have the coverages that they needed. And they were really in a situation where if there was something catastrophic happen, to their building, that there was nothing that they could have done about it. It would have been almost a loss. So you really have to weigh all of your choices and your options. And while you want to stick with your independent agents, sometimes you may not be able to based on the coverages that they give. So just kind of be aware of that. But again, when you're working with them, you have that personal thing as well. So there's, like I said, there's always good and bad. So let me talk about filing the claim. And this one's going to be kind of quick and easy because when there's a health insurance claim, there is no health insurance claim necessarily. The staff have the health insurance and they go to the doctor. The employer doesn't really know. We don't get reports as library directors who's doing what, which is good because I don't want to know. So there really isn't any claims in this sense. You do need to just kind of be aware if, like I said, if you have getting your insurance independently and you have some catastrophic claims, your broker's probably, your insurance agent's going to say you've had some catastrophic claims and your rates may go up. But for the most part, the employee just deals with their own health insurance. The employer does not deal with anything about it other than they make sure they pay the premiums and take the money from the employees for their portion. So it's kind of an easy situation. Nothing you have to worry about. So I've talked about the personnel end of the insurance, which is, again, health insurance and things like that. But I want to talk a little bit about what the employer pays about employers' liabilities, even though it is HR related. So there are 2 types of coverage that is more HR related because it deals with our employees in a library. And the first is your unemployment insurance. So, know that staff leave. Sometimes they leave when you help them to do so. So when an employee is terminated through either just cause or if you have a reorganization and you're downsizing, they are able to file for unemployment. And that's where your unemployment insurance comes in. The Illinois Department of Employment Security, or IDES, provides unemployment benefits for eligible workers who become employed through no fault of their own. And this means if you've been terminated, technically if someone's been terminated, there is some fault, but IDES doesn't see that yet. Or if you're downsizing. So every employer pays into the state unemployment insurance pool. We pay into this pool, so when someone is terminated and files a claim, the library doesn't pay out of pocket for for any wages that they receive, but from that pool that we contribute to. How much you pay into that pool is based on staff size and your claim experience. So if you never terminate people and you have few staff, your payments are probably getting pretty small on a monthly basis. But if you terminate a lot of people, or say you are downsizing considerably and a lot of those people are let go, your premium the next year is probably being a little higher. So that being said, don't not terminate someone who's not working out well for your library because you don't want to increase your unemployment, because that'll level out at some point. Keeping a bad employee is going to cost a lot more in the long run than paying unemployment for a certain amount of time. But that's a whole other webinar topic in itself. With unemployment, there is some terms that I want you to know. And I'm going to go through them quickly, but you'll have the slides so you can go back and do some research on them if you're more interested in it. But I just kind of want you to be aware of them because these are the terms that will kind of come up if you get to like when you're going through your unemployment process with your employee. The first is eligibility. The requirement for an individual, they must meet a certain requirement to qualify for unemployment insurance benefits. They have to have earned sufficient wages during the base period and losing their job through no fault of their own. A disqualification is reasons why an individual may be denied unemployment benefits, such as quitting without good cause, being fired for misconduct, or refusing suitable work. The appeals process is a procedure for individuals to challenge a denial or reduction in unemployment benefits, typically involving a hearing before an administrative law judge. The next is base period. This is a time period used to determine an employee's eligibility and benefit amount for unemployment insurance, typically the first 4 of the last 5 completed calendar quarters.
Hi, I made it.
Okay, thanks. So let me repeat that because that is actually kind of confusing. It's the time period used to determine an employee's eligibility and benefits amount for an unemployment insurance, typically the first 4 of the last 5 completed quarters before the claim is filed. And I know that's really confusing, so I have to reread that myself when I go and look things up like this. The next is benefit year. So this is the 52-week period during which an unemployed worker can collect unemployment insurance benefits. The weekly benefit amount is the amount of money an individual is entitled to receive each week in unemployment benefits, calculated based on their earnings during their base period. The maximum benefit amount is the total amount of benefits paid to an individual that they can receive during the benefit year, typically calculated as a percentage of their total base period wages. And finally, partial unemployment benefits are benefits available to those who are working reduced hours due to lack of work and earning less than their weekly benefit amount. I know that was a lot, and it's not really exciting to even talk about, but there are things that you kind of need to know if you end up getting an unemployment claim. So you kind of want to maybe do some research on that for future. The next type of HR-related employer insurance I want to talk about is workers' compensation. So this is a form of insurance that provides wage replacement and medical benefits to any employees who may be injured during the course of their employment. Benefits are usually paid by a private insurance company, meaning who your liability company is for your library, or through a state-run workers' comp fund, depending on what kind of work they do. It also provides benefits to dependents if a person dies as a result of a job-related injury. The employer pays into the workers' comp fund through their public liability insurance and is based on staff size and payroll. Like your unemployment, your claim history will affect your premium. So if you have a lot of people who injure themselves at work, and sometimes that happens in some libraries, your history is going to be a little higher, and your premiums, your workers' comp premiums, are definitely going to be higher. So the whole goal is to keep your workplace safe and secure so that your employees do not injure themselves while they are on the workplace at work. I want to talk about some terms again. These are going to be also equally as exciting as the unemployment, but terms that you need to know if you do have a workers' comp claim. So the first being your experience rating. So this is how insurance companies determine the premium rates for an employer based on their history of workers' comp claims. Like I said, if you have a lot of people who injure themselves at work and they make claims, then you're going to have a higher experience rating than for those who have never had an injury on at the workplace. A compensable claim is a claim that meets the legal requirements for receiving workers' comp benefits, such as an injury or illness that arises out of and in the course of employment. So if someone is injured, your insurance company will determine if it is a compensable claim and if they will indeed pay out. The next is your waiting period. This is the time between the date of the injury or illness and the date the workers' comp benefits begin to be paid. So there is that little bit of a period that happens, mostly because it's being evaluated and medical reports are being reviewed to determine is it indeed a compensable claim, and if they deem yes, then there's a waiting period for the employees to get those checks. The next is temporary total disability. This is a benefit paid to employees who are unable to work due to anything related to a work injury or illness. Temporary partial disability is a benefit paid to employees who can return to work, but with reduced hours or responsibilities due to a work-related injury or illness. A permanent partial disability is paid to employees who have a permanent impairment due to a work-related injury or illness, but can still work in some capacity. And then, of course, we have the permanent total disability, which is paid to employees who are permanently unable to work due to whatever their work injury or illness was. Again, a lot to know and to research more in the event that you ever get a workers' comp claim and start seeing these terms show up in your letters from your insurance company. So again, I want to talk about determining coverage for how to get these services. You want to, when you're buying your insurance, the coverage is really based on a couple of different things. So when you are determining your coverage, your insurance company is going to be doing that, obviously, and because they're the ones that are kind of managing that. You do it again through a broker, through a pool, or independent agents. If you have a pool, as an example, for unemployment, you pay to that pool and they pay the Illinois Department of Employment Security. If you don't, and you have an independent agent covering your liability insurance, you will be making payments directly to the IDES. And that's a conversation that you'll work with them on. So depending on how you get your insurance is going to depend on how you are paying into those coverages. But those coverages are determined by your staffing size and your claims history. So that's how you determine coverage and then how you buy it. So I want to talk a little bit about filing a claim for workers' comp and unemployment. When it is different for either one, for unemployment and workers' comp, they're filed by different people. When you have unemployment, you terminate an employee, you're supposed to give them documentation that they've been terminated and information about going to the unemployment office so they can take that. And they then go to the unemployment office, probably will, and file for unemployment through the IDES. So they are allowed to receive a weekly amount based on their wages for a specific amount of time, usually up to 26 weeks in any benefit year. I want to make a little caveat here to know that you can also pay unemployment benefits for anyone who has become underemployed in the state of Illinois. I don't know what this is in other states, but I know in the state of Illinois it exists because it happened to me. I hired a part-time maintenance person who was downsized from full-time position and I didn't know it. He had been receiving unemployment, and when I hired him, when I became the new employer on record, he ended up having to pay, I ended up having to pay as underemployment. So what he was receiving as a full-time person and what I was paying him part-time, I had to make up that difference. So I was not happy about it, but I wasn't going to fire him, obviously, because I still had to pay it even if I did. So just know that is something that can happen. So I want to walk you through a typical unemployment claim. The first thing is you want to make sure if you do terminate someone, you have to have good documentation. I'm sure you've heard this before. Always have documentation. It's important not only just in the process, but in the event of a lawsuit, but certainly in the event of an unemployment claim. So the first thing that they're going to do is they're going to file unemployment, go to unemployment and file a claim. The employment office is going to make a determination. If it's the state of Illinois, they will most likely get the employee will get unemployment regardless of why they were terminated. You have the option as an employer to fight the determination, and you're going to ask to submit all that necessary documentation so that they can then make that decision. If the unemployment decides to move that forward, they will grant a hearing, which is usually a conference call between the employer, the employee, and a judge. The judge will ask a bunch of questions. The employer and the employee get to make statements, and the judge will review all of that information and make a determination. Do know that in the state of Illinois, you rarely win unemployment hearings. I've had several. I've won 2. I feel lucky that I've won 2, but I've attended a lot more. So it is not always possible. It can be kind of nerve-wracking, but again, don't not terminate someone because you don't want to go through this process. So it is necessary for the best of your library. The next is workers' comp. So if someone does injure themselves at work, the employer is the one who files the claim. Your employee lets you know, or you've witnessed it. You should always have an incident report to, whenever something happens, whether it's a patron or a staff member, you want to make sure that you document that. You call your insurance company, tell them what happened. They're going to ask you to send any documentation that you have, and they're going to review that information and walk you through that process. They're going to assign a manager to the case, and that manager will probably be in contact with the employee. The insurance company that you have your liability insurance will be the ones who get all the medical reports about the injury. They'll access them. You may or may not be involved. It depends on your insurance company. They are going to manage that whole process. If your employee is off for that injury, they are going to receive that 66% of their weekly pay. And then ideally your employee gets better and they return to work. That isn't always the case. They may not be able to come back, or if they do, they come back with an accommodation. This all as part of the workers' comp process. It can take a little while to go through that process. So just know that you don't get to control the process. All you get to do is, call, file the claim, and read your letters of report later. And then ideally, the employee can come back to work and everything is fine. So I've covered the employee part, got a little bit of time to cover your liability insurance for your library. That's the physical part of your library. So you're building your grounds, things of that nature. Whenever I go into a building, I see liabilities everywhere. I tend to fall a lot. I trip on a lot. So I have fallen in public buildings. I've fallen at Lowe's. It's not been pretty. So I see liability issues everywhere I go. So you really should maybe take a walk around your facility and your grounds and look to see if you see anything that's obvious. Do you have cracks in your sidewalk that can trip? I can trip on a smooth surface. So that's just me. I would never sue someone because I can't stand up. But a lot of people will sue, and people do legitimately fall based on issues at your library. So you want to make sure you're checking all that out and look at everything with fresh eyes. You need to know where your public liability, who your company is that you're paying for your liability insurance, get your policies and become familiar with them. You need to review all of your coverages for everything you have, know what your deductibles are, and make sure you have your claims number, phone number, and policy numbers handy in the event you have to file a claim. So the first part of the insurance is your liability, which is the largest part of your public liability package. This covers anything that for personal injury to a third party or damage to their property. It also covers any damage to the library property, like say you have a hailstorm and a window gets broken, things of that nature. It's important that you get the most coverage as you can because this is an insurance that you want to get the best coverage you can because this is the part of the insurance that's going to get used the most. It is the most standard package is all of our business insurance packages. The next is your directors and officers, otherwise known as D&O. This covers your director and your officers or your board in the event of any wrongful act in their capacity of directors or officers. So this doesn't mean intentional acts. This means if you've made a mistake. So this coverage can extend to defense costs arising from criminal and regulatory investigations, trials, etc. But again, know that if it's an intentional illegal act, this insurance will not happen. It will not kick in. So, but we do make mistakes, and if we do, we are covered as directors and officers. The next is your flood insurance. This is obviously coverage against any property loss due to flooding. When you are getting flood insurance, your insurance company will look at things like topographical maps to see if you have lowlands, floodplains, or floodways, or if your area is susceptible to flooding. I think we've seen that insurances are not covering what they used to, or they're really raising the deductibles because of all of this catastrophic weather we've been having. So if you have flood insurance, check your policies and make sure to see exactly what is and isn't covered. You don't want to be caught in the middle of something and then find out that you are not going to be covered for that. And if you aren't covered and you need to be, then you may need to change your insurance companies to get the coverage that you need. The next is cybersecurity. And this is fairly new, meaning in the last 10 years, we all know this is regards to any kind of hacks that have been happening. They happen a lot. I just got a notice that my personal information is out on the dark web because of an AT&T hack from a couple of years ago. So even though we're libraries, we still are connected to the internet, and our documents are out there, and we have staff and social security numbers. So any of that can be hacked, and we are responsible for maintaining that integrity. So having cybersecurity insurance is going to help protect the library in the event that they get hacked. So having this, it can be very expensive, I will say that most places now are kind of requiring it. It's kind of becoming a standard. And you have a lot of documentation normally to fill out so that you can get this, to make sure that the companies will cover you. So it is a good insurance to have. It is a little bit expensive, though, I'm not going to lie. And the next is government crime. So this is coverage that covers employee theft, forgery, computer fraud coverage, like if your accountant, if your business manager is doing something and stealing, in that sense, hopefully it's not happening. But this kind of coverage will cover that government crime. It used to be started as a replacement for the treasurer's bond, because a lot of places couldn't get the treasurer's bond because it was based on their treasurer's financial information. So a lot of libraries have gone to government crime. The nice thing about government crime that it covers more than just your treasurer. It covers your entire staff. It covers your board. So again, a little more expensive, but the coverage amount that you're getting for it is well worth it. So when you're determining coverage for your library, you have to kind of ask yourself a lot of questions. And you want to, like, do you have enough coverage? Am I overinsured? Am I underinsured? So when you're finding that coverage, you need to kind of ask these questions of your providers. It's hard to know this in and out. Insurance is very complicated. So when you are determining your coverages and looking at policies, you want to kind of know a couple of things. First is your insurance terms. Like your health insurance, you still have a deductible, a premium, and a deductible and a premium. You don't have co-pays for liability insurance. And the same thing is, the higher your deductible, the lower your premium. So those are numbers that you kind of have to work and figure out what's going to work for you. The next is your building value. You need to know the value of your building. Do you have a current building appraisal? If you don't, you might want to get one. You need to know what your building is worth and what is in the building, because in the event of a loss, you need to replace that. You need to repair and replace. And if you're only insuring your building for what it costs in 1970 to build, you are not going to get anything to replace it or repair it. So because costs are far greater than 1970. So I would highly recommend you know your building's value and get an appraisal if you can, so that you have those current values. The next is your fixed asset. So these are items that are purchased over a long-term use. And this is usually your land, your buildings, and any equipment within there. Again, you should have an inventory of all of your equipment and all of your furniture and everything else, because in the event you have to replace it, it's going to cost more. You also have these numbers when you get your audit, and you can depreciate, you get your depreciated value. If you have an appraisal, the appraiser will come in and look at all of this stuff, from your building, your grounds, your collections, your assets. Everything that you have will have a fixed number to that. The next is, how do you know how to buy insurance, what kind you need? Look at the libraries in your area, kind of see if you find a library similar to what yours is and your collection, and see what their coverages look like. In rural areas where maybe you don't have a library close, call your school district and kind of ask them to walk you through what they have. You aren't going to need what the school district needs necessarily, but that will help you kind of understand it. And then obviously we have experts for a reason. We are not insurance people. While I think insurance is interesting, I am no professional. And so ask your professionals. It is their job to help you understand it. So ask them and find out what it is that you need. Of course, insurance companies always want to spend more, but you can ask those questions to kind of get a better understanding. Again, when you're buying insurance, it's through the same thing. You can do it through a broker, a pool, or independent agents. As I discussed with health insurance, it's the same concepts, just with a different type of insurance. So when you're filing a claim, you have an accident, you have a slip and fall in your building, you need to contact your insurance company immediately. If you have a catastrophic weather event, if you have a pipe burst, you need to contact your insurance company immediately. That's why you have a 24/7 claims number. And you need to mitigate. If you have a burst pipe and you've got water in the building, the first thing you do is turn off the water. And then you need to call them, because they may need to get in right away, because that water is going to start, creating mold, and it's going to do a lot of damage. You got to get somebody in to do the work. So the sooner you have them in, the sooner things can get taken care of. That's why you need to know who your company is, what your policy numbers are, and your 24/7 claims number. Do it quickly. If you have any key personnel in the library or any board members that, kind of step in when you're not around, they need that information as well, because filing a claim is imperative to get things taken care of as quickly and as expediently as possible. If you don't do it quickly, then the library is going to cost a lot of money later. So, you don't want to have to remediate mold. You want to suck the water out, have Serpro come out, suck the water out, and get that done so we can start drying things out, because you don't want situations to exacerbate. So with that was a quick and dirty on insurance basics. Does anyone have any questions? Oh, I see Katie has one. How do you go about getting a building appraisers? You can contact an appraisal company. They look at everything, and there's a lot out there. You can just put something out on your director's listserv, and I'm sure someone has an appraiser company. I've used Illinois Appraisals in the past. I've always been happy with them. I don't know where you're located, Katie, so I don't know if you're north or south, but I'm north. So, but they will look at your entire building and give a value, and they'll come in for a day or 2 days and just review everything and go from there. So I hope that answers your question. I don't know, a tort immunity. A lot of insurance costs, you may have an insurance, line item in your budget. Depending on how, I don't know who your funding agent is, but usually we have a liability insurance line, and then it comes out of your liability insurance. If you have a health insurance line, it would come out of your health insurance line. So it depends on how you have your budget set up.
I was just going to say, we have an insurance fund which takes care of like the property, workers' comp, all of those types of things, but it does not cover our health insurance. I think that there was something with regards to library law and I don't remember, because a board member asked me if we could pay health insurance out of the insurance fund. And so I looked at library law, and I interpreted it as you could not pay health insurance out of the insurance fund.
Yeah, usually it depends. It depends on how you set it up too. So I would check with your library attorney when you're setting up your financials on what you can pay it out of. Most people have a health insurance line item in their budget, and then they have a liability line item in their budget. So they would come out of that. So how you pay your insurance is really going to matter on what your library has done in the past. But then, check with your auditor, your accountant, or your library attorney to verify how you're doing that. I see Kathy asks how you find a pool. There's not a lot of pools out there, to be perfectly honest. There's obviously ILA has the LIRA insurance pool, which is the liability insurance. I actually was the co-chair of that for the first 3 years of its existence. So I'm a fan of pools in general because I had a small library. My health insurance is Limerick, which is the northern part of Illinois, I believe. But I think there's an ILBPC as well. If you want to email me, oh, someone put something in for the laws and rules. If you want to email me on that, I got my email here. I can get you a list of them that are out there. I don't know all of them offhand, but I can certainly get a list for you. There's not a lot. And the pools have rules. You can't get in if you haven't been in a pool. So like Limerick, if you haven't already been in a pool, you can't join it. A lot of it is because Blue Cross Blue Shield is who has a lot of the pools have Blue Cross Blue Shield, and they don't want to compete with themselves. So they would rather not have people in pools. But if you, like I said, if you want to email me, I can certainly, IPBC, that's what it is. You can look into those. So, but they're worth it if you can get in. Sometimes you just can't get in. You can also try to see if your community or your village, if you can get into their insurance plan as well. You can certainly ask them if you're not part of it. If you're a district library, you can maybe ask and see. So I'm going to stop sharing my screen too. Oh, if anyone wants to purchase our books, there's an ALA code that you can do that for $5 off. So I'm going to stop sharing because you guys are going to get the the presentation. Any other questions?
Kathy, I'm not seeing any other questions. We have just a couple of more minutes before we're just about done.
Okay.
I do know, Kathy, I have like all these notes written here, and I've been,
Okay.
I've been here in this job for 4 years, and there's all these little notes like ask my insurance agency agent this, and do I have that? And so this was so informative,
Oh,
and,
good,
and
good.
and giving me, even as somebody who's been, in my job for a couple of years, things to think about. So I
Well,
really appreciate
I'm
that.
still learning, I mean, I'm retired and I do consulting. I'm still learning. Insurance is difficult. I mean, I was like, oh, I hate this. But as I have been working over the years and then getting on Lyra really helped me understand it more, kind of understanding the ins and outs, especially the pool part of it. But I think it's interesting. And again, I know it's weird, but I literally do look at every place I walk and think of all the liabilities that people must be taking chances on.
Yeah.
And
And
I,
that's the one thing we can all do right now after we get
yes,
off of this is we could go out and walk
yeah,
around
take a
our
walk.
libraries. Yeah. Yeah.
Take a walk and look at it with fresh eyes. Um, I go to Europe a lot. I'm like, oh, they probably don't care about insurance at all because it's bad. Or if you go to New Orleans, those sidewalks are horrible. They must have more slip and falls in New Orleans because those sidewalks are horrible. So,
Okay.
but I hope it was helpful. I hope everything was helpful. And if you guys want to contact me, email me, I'm happy to. And my email is on there, and you can certainly email me, and I can try to answer any questions you have.
Okay. Well, thank you so much again. And as noted earlier, obviously we're recording this. The recording will be uploaded to the ILA website tomorrow. And just a reminder, if there are those of you who have not attended a forum meetup before, the Small and Rural Libraries Forum has meetups scheduled either every month or every other month. Our next one is Thursday, August 28th. It is a database deep dive. So if you have those state databases maybe on your website, if you heard about them, we're going to have someone speak to us about diving deep into those databases. All of the Small and Rural Libraries forums meetings are open to any ILA library worker. The registration links are on the ILA website. You can also join the Small and Rural Libraries Forum Google group and the Facebook page. We put updates and reminders there. We're always looking too for people who just want to be part of the forum. So our next forum meeting is Thursday, August 14th. And again, you can find that information either on the Google group or the Facebook page, and you just have to register to get the link. So since there are no more questions, oh, and by the way, Kristen put the forum meetups in the chat box as well. But again, I said those are on the ILA website. So thanks so much again, Kathy. Appreciate it. Everybody, enjoy the rest of your day. And most importantly, stay cool.
Yes, I'm going to my pool. Right when we
Yeah.
get done, I'm going to put my suit on and jump in the pool.
All right. All right.
All right. Bye, guys. Thank you.